Imagine waking up one morning, scrolling through your phone, and seeing your once promising Ethereum investment plummeting without mercy. You remember the day you first bought in, the excitement, the dreams of decentralized futures, of financial freedom beyond traditional banks. But now, that glow has dimmed into frustration and doubt. You're not alone in feeling this way. Many have quietly started questioning what they thought was a revolutionary technology. I was one of them. For years, I believed Ethereum held the key to unlocking a new digital era. Smart contracts changing how we do business, decentralized apps, reshaping entire industries. But somewhere along the line, something shifted beneath the surface. It wasn't just about price volatility or market hype. It was deeper. A tangled web of issues no one openly talks about because it challenges the narrative everyone wants to hear. I want you to understand why I made a choice that surprised many friends and fellow crypto enthusiasts. Why I decided to ditch Ethereum altogether. This isn't a hasty reaction or fueled by momentary panic. It's an honest reckoning after digging past headlines and marketing buzzwords into real-world implications that impact anyone holding on to hope for this platform's promise. Picture being at the forefront of innovation but realizing that progress is slower than advertised, network congestion causing endless delays while transaction fees soar unpredictably high like tolls on a never-ending highway jammed with traffic. Imagine trusting in decentralization only to discover central points of control quietly creeping back in under layers of complexity, so opaque most users never see them until it's too late. There's also an uncomfortable truth about scalability compromises forcing tough trade-offs between security and usability. Choices made behind closed doors by developers whose vision sometimes diverges from those who fund their work or rely on their tech daily. And let me tell you about transparency, or rather, lack thereof, in governance decisions affecting millions without meaningful input from community members who gave birth to these projects through sweat, equity, and sleepless nights, coding solutions nobody else dared attempt. All these factors combined painted a picture far less rosy than early adopters were led to believe, and compelled me toward alternatives, promising clearer paths forward, instead of chasing elusive perfection built on shaky foundations. So here's my story, not just another exit tale, but an eye-opening journey revealing truths hidden beneath Ethereum's shiny surface. Truths you deserve to know before deciding where your faith and funds truly belong in this ever-evolving cryptosphere. Imagine pouring your hard-earned money into what seems like the most promising technology of our time, only to slowly realize that beneath the glittering surface lies a labyrinth of frustrations and hidden pitfalls. That was me with Ethereum. At first glance, it's a marvel. A decentralized platform promising to revolutionize finance, art, and even governance through smart contracts. But as I dug deeper, I uncovered layers of complexity and issues that no one was really talking about openly. Take transaction fees, for example. When you hear about Ethereum's potential, you rarely hear about the exorbitant gas prices that can turn a simple transfer or contract execution into an expensive ordeal. Picture this. You want to buy a digital collectible or execute a DeFi trade expected to be worth $50, but then you're slapped with $30 in fees just for making it happen. It's enough to make anyone question whether they're truly participating in a democratized financial system or just lining the pockets of miners and validators. Then there's scalability, or rather, the lack thereof until very recently. Remember those times when cryptokitties congested the network so badly that transactions slowed to a crawl? That wasn't just an isolated glitch. It exposed fundamental limitations in handling real-world demand at scale. This bottleneck meant delays and uncertainties became part of everyday use, hardly what you'd expect from the future everyone raves about. Security concerns also crept up on me quietly but persistently. Despite its robust design principles, Ethereum has been plagued by smart contract vulnerabilities leading to multi-million-dollar losses due to bugs or exploits, sometimes caused by rushed deployment or insufficient audits. For someone entrusting their assets here, these stories aren't mere headlines. They are cautionary tales highlighting risks lurking beneath the surface. And while Ethereum is pioneering proof-of-stake consensus now aiming for sustainability, its transition hasn't been seamless nor universally embraced, yet by all users or developers who remain wary of centralization risks tied to staking pools, dominating voting power. All these factors combined made me realize my faith and funds needed reevaluation beyond hype and promise alone, because investing isn't just about betting on innovation. It's about safeguarding your stake amid uncertainty nobody warns you up front about. You know, when I first jumped into Ethereum, it felt like stepping onto a rocket ship bound for the moon. The excitement was palpable. Decentralized applications, smart contracts revolutionizing industries, and that massive developer community pushing boundaries every day. But as months turned into years, cracks began to show that no one really talks about openly. Take transaction fees, for example. At first, paying a few dollars seemed trivial compared to the potential gains. But then came those spikes, sometimes $50 or more just to move your own money around. It's like being charged a premium toll on what should be an open highway. Imagine trying to sell a rare digital collectible or make small trades during these fee surges. The cost eats up any profit you might have made. And let's not forget about scalability issues. The network congestion that slows everything down just when you need speed most. Picture this. You're in the middle of executing a time-sensitive trade or finalizing an NFT auction, and suddenly transactions freeze up or take forever to confirm. That delay can mean lost opportunities or worse, losing out on deals altogether because someone else got there first. Then there's the elephant in the room nobody mentions much until it hits hard. The environmental impact tied to Ethereum's proof-of-work consensus model before its transition to proof-of-stake was complete. Watching headlines report massive energy consumption made me question if supporting such tech aligns with my values and long-term vision for sustainable innovation. I also realized how fragmented the ecosystem felt at times. While promising projects bloomed everywhere around Ethereum's core network, navigating through countless tokens and protocols without clear guidance often left me overwhelmed rather than empowered. What truly tipped the scales for me was seeing alternative blockchains come into play offering faster speeds and lower fees without sacrificing security. A balance Ethereum struggled with despite its dominance. So when I decided to leave Ethereum behind, it wasn't merely an emotional reaction, but a calculated choice based on real-world frustrations, paired with emerging solutions elsewhere, addressing these pain points head-on. Investing is more than riding hype waves. It demands clarity about where vulnerabilities lie hidden beneath shiny promises, so your assets don't become casualties of overlooked realities everyone tends to ignore until it's too late. Let me take you deeper into why I made the tough call to step away from Ethereum, especially when everyone else seems so hyped about it. It's not just about the buzz or the price charts. It's about real, tangible risks that almost nobody talks about openly. For instance, consider the gas fees. Remember those times when a simple transaction could cost you more than your actual trade? That's not just annoying, it's a barrier that shrinks your options and eats into your profits, unless you're moving massive sums. And let's be honest, who wants to waste capital on fees instead of growing their investment? But beyond fees, think about network congestion during peak moments, like when an NFT drop sends millions rushing at once, or DeFi protocols suddenly spike in usage. The network slows down or even stalls completely. Transactions get stuck in limbo for hours, sometimes days. Imagine trying to seize an arbitrage opportunity or react quickly to market shifts only to be hamstrung by blockchain traffic jams. This isn't hypothetical. Many traders have lost serious money because timing was everything, and Ethereum couldn't keep up. Then there's the issue of security vulnerabilities hidden beneath shiny interfaces. The infamous DAO hack years ago should have been a wake-up call, but somehow still gets glossed over as ancient history. Yet echoes of those vulnerabilities linger in complex smart contracts today, code that looks flawless but can be exploited by someone with enough savvy and malicious intent. Recently, we saw multi-million-dollar losses due to bugs in supposedly audited contracts on Ethereum-based projects. When you pour thousands into tokens backed by these contracts without fully grasping their fragility, you're essentially gambling with blindfolds on one. And don't forget scalability promises like sharding and layer 2 solutions. They sound great until reality hits delays, after delays, after delays. Investors expect quick fixes, but instead face prolonged uncertainty around whether these upgrades will solve core problems or introduce new ones altogether. I realized holding onto my assets tightly while hoping for Ethereum's grand turnaround was riskier than I initially thought. Not because Ethereum is doomed per se, but because ignoring these layered issues means ignoring potential disaster zones directly underfoot. So yes, stepping off what feels like a rocket ship might seem counterintuitive now, but staying aboard without clear sight of where the cracks form. That's how fortunes get wiped out quietly while everyone cheers louder elsewhere. You see, I'm not here to tell you that Ethereum is a bad project or that everyone should run for the hills. Far from it. Ethereum has been a groundbreaking force, a pioneer in decentralized applications and smart contracts, igniting an entire ecosystem where creativity and innovation flourished. But what I've realized, and what too few dare to admit, is that clinging onto something just because of its past glory or hype can be the most dangerous trap of all. It's like watching a ship slowly taking on water while everyone else keeps celebrating the voyage, oblivious to the cracks beneath their feet. The truth is, when you choose to stay invested in something without scrutinizing its evolving fundamentals and risks honestly, you risk being blindsided by sudden shifts nobody saw coming. This isn't just some abstract cautionary tale. It's personal. I've witnessed firsthand how loyalty turns into blind faith, how excitement morphs into negligence. And with Ethereum's ongoing scalability issues, rising fees during peak times, and fierce competition emerging from newer blockchains promising faster transactions at lower costs, the landscape is shifting rapidly under our feet. Not only that, but delays in promised upgrades have stretched longer than expected, making it harder for everyday users and developers alike to rely on it as their go-to platform without frustration creeping in. Staying aboard while these warning signs pile up felt like willingly stepping onto thin ice, hoping it would hold. Ditching Ethereum wasn't about abandoning my belief in blockchain technology or decentralization. It was about choosing clarity over comfort and pragmatism over nostalgia. It meant acknowledging that sometimes growth requires letting go. Recognizing when your energy is better spent exploring platforms built with lessons learned rather than clinging desperately to ones weighed down by legacy constraints or unresolved bottlenecks. I want you to think deeply about where your investments and passions lie, not out of fear, but out of empowerment through knowledge. Question everything even when it's popular. Look beyond surface-level success stories. Understand both strengths and limitations with equal honesty. Don't let enthusiasm cloud your judgment, especially when real money and future opportunities are on the line. Because here's what nobody tells you. True progress doesn't happen by endlessly riding waves created yesterday. It happens by boldly navigating new currents today, sometimes requiring tough choices before they become obvious to everyone else. So as you consider whether holding onto Ethereum makes sense for you personally, remember this moment of clarity I'm sharing now, the untold truth behind my decision. And ask yourself if staying put feels like hope grounded in evidence, or just wishful thinking masked as loyalty. The answer might change everything for your journey forward.